Happy Monday, traders, and welcome to another week in markets. Okay, so there's a couple of things that the market's going to be focusing on to start the week, and the first thing they're going to be looking at is some manufacturing PMI data that comes out of Europe, out of the Eurozone. So in August, we saw a print of 51. In September, we're actually looking, markets expecting a touch lower at 50.5. So in August, we actually had some positive manufacturing input with the Olympic effect now that Olympics are over. So we're looking for a touch lower print. Now the ECB did meet obviously this month. They did cut rates this month, but Lagarde in her press conference didn't look like she was in a rush to, even though the door's obviously open for more rate cuts by the ECB and they will cut rates, but she didn't look like she wanted to cut rates so quickly again in the October meeting. So going back to this manufacturing print, if the print actually does come out, the composite PMI, much weaker than the market expects, no doubt then the market will immediately start pricing in that, especially now that the Fed's actually gone aggressively by 50 basis points, that the ECB will ease rates again in October. However, if the manufacturing print does hold up, well, then maybe we might see those rate cut expectations tapered a touch, and euro then may actually, finally, rally and spike above that 112 key resistance level. So let's see how that manufacturing print plays out. Okay, so secondly, market's going to locally, they're going to be looking at some. Or the RBA meeting and also a CPI print that we get on Wednesday. Now for the RBA meeting tomorrow, obviously the market doesn't expect any change, but the RBA has been hawkish. Out of all the central banks globally, while the rest are cutting rates and cutting rates aggressively, the RBA was actually even looking at raising rates in its last meeting. So the RBA will be looking at that CPI print on Wednesday. Market expectations is actually for that print to have a decent fall. So in August we saw a print of 3.5%. Market's looking for that print to come in around about 3.1%. Some analysts are actually looking at it to fall below 3%. So it'll be very interesting to see whether or not the RBA has confidence that that CPI number that will be coming out the day after it actually meets will have confidence that CPI is actually going lower, and to see whether or not its language changes on tomorrow at its meeting to be less hawkish. Having said all of this, if the RBA does not change its language and is still hawkish, and if the CPI number does not come out as low as what market's expecting, then I think that Aussie is in for a very aggressive rally. Currently we're trading around 68 cents. No matter what the RBA does, even if potentially we do see a rate cut down the track, the Fed's obviously going to be cutting rates more aggressively. So the rate differential between Australia and the US is finally going to come in, and by the end of the year, possibly we'll see basically Aussie rates above US rates. So with a lot of confidence, Aussies are buying dips, and potentially by the end of the year we're going to see it above 70 cents. Anyway, I hope you have a great start to your trading week, and we'll check in soon.